there are a few things. So one, that's the trade setup. I also want to make the point about how everybody who is bullish as well is striking a tone of balance. So the trade setup is this, that I think it's difficult to be bullish on a trending basis in these uncertain times, and therefore we had a bump up after being oversold, if you will, in certain parlance, and therefore that is done. Now, is it possible to be very, very bullish? No. In fact, we made this point, I think, on Friday or Monday, that or Thursday, Monday, that be careful that we are looking like peaking out, if you will, on the short-term bounce. Not saying that I'm pointing towards a trading strategy, just that be cautious with leverage is the limited point I'm making. Now, I would suspect that while autos, and Alex will dwell on Tata Motors, but I would suspect auto components, in addition to auto companies, could be seeing some selling on the latest US tariffs, because a lot of Indian auto component companies have plants in various other parts of the world. More importantly, because they supply to some of these global car companies, and if in the mother market, sales of global auto majors slows down a little bit because of tariffs, perception-wise, right now, that could bring about an impact. So keep an eye out for Bosch, Samil, Bharat Forge, maybe, but essentially passenger vehicle suppliers. So be mindful. Sona Koyo, keep an eye out for all of those. Sona Comstar, that is, erstwhile Sona Koyo. And oil upstream might have tactical gains, Alex, 5 days out of 6 on an upside, but very unlikely to see a major uplift if indeed the larger call is that the world is looking at a slowdown in 2025. Difficult to make a case for oil really having a big bang move. Even heights of political uncertainty in geopolitics, oil has failed to cross 85. So
because the demand texture is just horrible.
Demand texture is just horrible. Lastly, Alex, I found the texture of the Morgan Stanley note interesting. So they are balancing it out. So Rhythm Desai and team say that they expect growth data to improve, RBI to get more dovish, and an earnings beat in the upcoming earnings season. A global recession or near recession, however, would challenge our bullish call and keep equities off highs in 2025. The last point is interesting. I'd love to see what happens. He's saying that they think that the sell side is set to be surprised to the upside in the coming earnings season starting April. We made this point, right, that we are watching out for 15 days of March to see the earnings commentary from companies.
But it also struck me yesterday, Neeraj, that at our conclave, I can't remember the exact date, but
February
it was certainly before
week.
The buying of foreign institutions started, and Rhythm made that point there, sitting on stage with you, saying that it's already turned, and the growth levers are in play. He had said that exactly. I'm paraphrasing, but essentially that.
Yes, you are right.
So, and it's playing out. Well, you heard it first on NDTV Profit. But let's talk about the cues heading into the monthly expiry, because you could have to brace for volatility considering how we've seen the last couple of trading sessions. And Puneet is joining in to tell you about this, because Puneet, it's interesting. You will almost certainly end this series with gains, and that is a breath of fresh air, isn't it?
Well, definitely. And, we've seen the open interest also fall dramatically going into this expiry. And while it has been a very rosy picture over the last 7 to 8 days, yesterday was a rude shock for all investors. And as you guys rightly said, leverage not a friend today. So we're seeing the implied open also open slightly in the red today. But we have seen the range for the open interest as well as, the expiry also for call and put options, shorten in this particular time frame. So while we're expecting the Nifty to be in a premium of 35 points, let's also look at the open interest distribution, because we are seeing the maximum call options now at 24,000 odd levels, and that's come down from roughly about 25,000 a couple of days ago, definitely, so watch out for that. The maximum put option open interest is also somewhere around the 23,000 mark again, and while that's higher from the 22,500 that it usually is, going into today is a very interesting session to see where we end. Finally, I just want to look at the delivery data as well, and my colleague Chinmay has put this together, highlighting that HDFC Bank is one of the key ones that has seen consistent delivery over this particular last couple of weeks. So it's 71% of yesterday. We've also seen large cap stocks generally highlight in this particular data where, roughly Bharti Airtel is also one. And IndusInd Bank was an interesting one in terms of 43% delivery. But overall, we've seen the bias towards large cap and delivery taking there as well. So it'll be important to see where we end this session. We're at 2400. The resistance is at 23,800. While the Nifty Bank as well will be one more interesting to watch out for, apart from the other stocks in the delivery, that is banks as well. So we're at 51,200. The resistance a couple of weeks ago was 50,600, which has now moved to 52,300. So watch out for those levels. But overall, we're going into uncertainty with the Trump's new auto tariff as well as the multitude of auto component stocks that will be in focus today.
Yeah.